Hello everyone, and welcome back to Crypto in 5. Guys, watching this market right now is exhausting. If I had to sum up Bitcoin's recent price action in one sentence, honestly, it's a 10 on the hot crazy scale. Why do I say that? Because the $90,000 level has become a total no-go zone that Bitcoin just can't break through. Count with me, how many times has it been now? I've lost track of all those long wicks at the top. Every time, it gives you a glimmer of hope, making you think, hey, maybe this time is different. We're finally breaking out. And then, bam, it slaps you right back down to reality. Just look at yesterday's Asian session. Bitcoin actually looked pretty strong, rallying higher, and the market sentiment shifted instantly. Even I was thinking, wow, is it finally happening? We've been stuck under this ceiling for 3 weeks. Surely we break 90K today? And the result? Those hopes were popped faster than a soap bubble. It was like Bitcoin touched a live wire. The second it grazed 90K, it got electrocuted and crashed right back down. It's a classic fake out designed to trap overeager buyers. Missing this breakout again, I bet those of you trying to buy the dip are feeling pretty discouraged. Some people have probably given up entirely, ready to close their apps and wait until next year. Pessimism is spreading through the market now. Everyone is looking at the downside, thinking Bitcoin is headed for $85K, or even hunting for support all the way down at $80K. Alright, before we dive deeper into this weak performance, let's go through the usual disclaimer. Remember guys, the crypto market is incredibly volatile and high risk. Everything I share today is based on my personal views and data analysis. It is absolutely not financial advice. Before making any trades, do your own research and know your risk limits. It's your hard-earned money. If you lose it, no one is paying you back. Okay, disclaimer over. Let's get into it. Let's cut to the chase and jump into the technical analysis. On the surface, it looks like Bitcoin broke out of the downtrend line that's been holding it back since October. Technically, that's a win, right? But it hasn't really fired up the bulls. Why? Because yesterday's pump and dump was a total mood killer. It proved that resistance at 90K is like a brick wall. With this much selling pressure, we need to keep a close eye on our support levels below. First, our short-term line of defense is at $87,000. If we lose that, the bears will likely take over and push us down to the critical $85,000 level. Guys, pay attention here. Why is 85K so important? It's not just the low point of several pullbacks since December, but it's also where the lower Bollinger Band sits right now. Think of it as Bitcoin's current lifeline. If that 85K support fails, the floor drops out. That opens the door straight down to the psychological $80,000 mark. If that happens, it could get pretty ugly. What if we get a small bounce? Don't celebrate too soon. Unless something big changes, the middle Bollinger Band around the 88K to 90K zone will act as a ceiling. Every rally will likely get knocked back down by sellers. To sum up the charts, as long as Bitcoin is stuck under 90K, the outlook is pretty gloomy. Unless, and I mean unless, it can put together a massive rally and stay above 90K. We aren't out of the woods yet, but right now, that's looking like a tall order. That's the technical side. Now, let's look at the money flow, because the money doesn't lie. I have to share a harsh reality from CoinGlass data. As of last Friday, Bitcoin spot ETFs have seen net outflows for 6 days in a row. That's over $1.1 billion leaving the market. It's not a total collapse, but this constant bleeding feels like a slow death. What does this tell us? It means the smart money on Wall Street, the institutional investors, are quietly stepping back or de-risking. That massive flood of institutional cash hasn't just stopped, it's actually starting to reverse. But our favorite permables MicroStrategy just made another move. According to the latest filings, they added another 1,229 Bitcoins to their pile last week. Hearing that, you might think, wow, the whales are still buying, so why should I worry? Hold on, don't get ahead of yourselves. The devil is in the details. Yes, they are buying. But did you notice the change in pace? In previous weeks, they were scooping up over 10,000 coins at a time. Buying only 1,229 is a massive drop-off. It shows that even the biggest bulls are getting cautious at these prices. ETFs are selling on one side, and the big bulls are slowing down on the other. See the conflict? The big players in the market are clearly hesitant and divided right now. This brings us to another highlight, Grayscale's Q4 2025 crypto market report. It's a very interesting read. I've gone through it and picked out the key takeaways for you. Listen closely. First, Grayscale states that for Q4 2025, the growth momentum for the whole market is stagnant. That matches exactly what we see on the charts, right? Just a boring sideways grind that drives everyone crazy. But amidst all the boring price action, the report highlighted one sector that is crushing it: privacy tokens. Why privacy coins? There is some serious big picture logic behind this. Look at the news. First, Hong Kong announced they are strictly enforcing new banking rules starting January 2026. What does that mean? Regulators are watching more closely. It's getting harder to stay private, and every transaction is becoming more traceable. Then look at Japan. They proposed cutting crypto tax to 20% in 2026. Sounds great, right? But it only applies to specific assets, which is just another way for the government to track what you own. On top of that, global tax authorities are getting stricter every day. As the regulatory net tightens globally, big money starts looking for safety and anonymity. It's no surprise that privacy leaders like Zcash ZEC did so well in Q4. Investors are voting with their feet and moving to safe havens. This is what we call defensive rotation. When the main market is weak and the government is breathing down your neck, the privacy sector starts to shine. Beyond privacy coins, let's look at some big macro news that will drive the next trend. First, liquidity. The US M2 money supply, basically the amount of cash circulating, just hit a record $22.3 trillion, up over 4% from last year. What does this mean for us? It means there is still plenty of cash out there. The liquidity hasn't dried up. As long as people fear inflation and the dollar losing value, the reason to own Bitcoin remains strong. It's just that right now, that money is too scared to enter the market, or it's looking elsewhere. So where is that money going? This leads to our second piece of news. Where are the new opportunities? Hyperliquid Labs is about to drop their first hype token distribution, releasing about 1.2 million tokens. Airdrops and new launches like this are some of the only hotspots left. When Bitcoin is boring, smart money goes chasing airdrops or new on-chain projects instead of just staring at the Bitcoin chart. Okay, let's wrap everything up for today. Now, looking at this 90K standoff, my personal advice is don't be stubborn. Face the facts. 90K is a major hurdle right now. Until we see a breakout with a ton of buying volume, every jump in price is likely a trap for buyers. Watch the levels. Short term, watch 87K. If it holds, we keep grinding sideways. If it breaks, 85K is our last stand. If 85K fails, we are likely heading straight to 80K. Watch the whales. ETF money is leaving, and MicroStrategy is slowing down. Neither of these are buy signals right now. Finally, I have to give you one more quick risk warning. There are no gurus who know everything. Data and analysis are just tools to give us better odds. They aren't a crystal ball. Market mood is very fragile right now. One piece of bad news could send things tumbling, so please, manage your risk. As long as you don't blow your account, there will always be another trade. Alright, that's all for today's Crypto in 5. What do you think about Bitcoin's struggle at 90K? Do you think we're heading to 80K, or are you quietly buying privacy coins? Let me know in the comments, and let's talk about it. If this video helped you out, please show some love, hit that like button, subscribe, share it with a friend, and don't forget to turn on notifications. I'm Crypto in 5, and I'll see you in the next one later.